Good afternoon, everybody. I'd like to welcome you all to the Halftime Talk feature interview. And today we're delighted to be joined by Roxana Caliminte, Deputy Secretary General of the Gas Infrastructure Europe. Roxana, thanks so much for joining us today.
Thank you very much for having me, and I'm delighted to talk to you about the perspective of Europe's gas supply and demand and decarbonization potential for next winter and in the next years to come, really.
Okay, fantastic. Well, I mean, you know, the gas market in Europe has had quite a year, hasn't it? I mean, if we just take a sort of 12-month perspective backwards, and also let's look forward as well, similarly. In your opinion, how well do you think Europe has handled the last 12 months in terms of securing its gas supply? Of course, I'm asking you this question in the context of the Russia-Ukraine war and all that triggered. What mark out of 10, what would you give Europe?
Europe as a whole, I think, was around, let's say, from 1 to 10 on 9. But what I would like to emphasize is that the gas infrastructure in Europe is ranked 10 from our point of view. And I'm actually very happy to share more with you about the why. Basically, the gas infrastructure saved Europe for gas supply last winter. Industry, business models, and regulation proved to be fit for purpose to respond to the biggest disruption we had in the energy system since the Second World War. Tens and tens of gigawatts were rerouted from the traditional import and transport routes. The EU gas stocks were filled at almost full capacity, much earlier and well above the EU's targets. And to diversify gas supplies, new LNG regasification capacities were developed in no time at places where they can serve the wider EU market. So just for you to see the perspective of how well they've done, the LNG terminals regasified 75% more gas compared to 2021. But even more than that, what do you do with so much gas if your infrastructure is not well interconnected and well integrated? You need to be able to take the gas from A to Z and to really send it wherever it is needed. So that's why we've seen also new pipeline interconnectors also being built to allow new gas supplies to reach landlocked countries and markets with no import terminals. And we've seen a really great example in the Baltics. So you can take here the Polish-Slovak Republic gas interconnector, or the Polish-Lithuania gas interconnector, or the soon-to-be operational Poland, the Czech Republic pipeline project. We've also seen the inauguration of the Baltic pipe between Poland and Denmark. We've seen also a lot of LNG terminals popping up in the region. Some terminals were extended with new regasification capacities, and a lot of FSRUs were also brought to the EU shores. So I think none the less to say that we were also saved by really good weather conditions. So that helped the EU gas demand go a little bit lower than expected. But fortunately, the infrastructure was well in place to deliver those molecules.
Yeah, okay, great. Well, I mean, as you said, the weather certainly probably helped a lot, but Europe did get its act together both on infrastructurally, as you mentioned, and you pointed out a few of the new connecting points that have come to fruition perhaps this year. They were already in the making, of course, but were probably speeded up because of the crisis. And also, the fact that we had warm weather, but now, let's say looking forward, because only 3 months ago, we had commentators saying, okay, well, Europe got through this winter, everything's fine, but it's next winter we have to worry about. But then it doesn't sound like we have to worry about anything this coming winter anymore. The infrastructure you've just described and the options that Europe has prepped itself for, even if we have a colder winter this year, do you think it'll be all right in terms of the storage capacity it's built up, the LNG options? Is Europe feeling 100% secure now going forward?
It's very important to look at 2 ifs, because they will be decisive for next winter. First, if China's LNG demand recovers to their 2021 level, this would capture over 85% of the expected increase in the global LNG supply. And second, if Russia stops gas flows completely. So according to the International Energy Agency, it means that these 2 combined means that the EU will face a gap of 30 billion cubic meters during the key period for refilling gas storage this summer, 2023. But speaking of gas storage, as we speak, they are already filled at around 60% capacity. Compared to previous years, this is a record filling level. But how to prepare for these 2 big ifs? Because it will be a mix of everything. Mm-hmm. The gas infrastructure operators will deliver their part. We are going to increase market transparency. And I would like to invite you to check our really well put together transparency platforms, ALSI and AXI. And we are going to contribute with this first-hand data to the EU's energy platform. So this is a common purchase platform for the LNG terminals to have a better negotiation power, let's say, for these new capacities being booked in the spot market. Then we are also going to identify logistical bottlenecks, both at the terminals and transport. But for that, it's really important to have a regulatory framework and financial support to alleviate those bottlenecks. And we are also going to continue to add regasification capacity. But for that, we will need to work really hard with authorities to simplify those regulatory red tapes and permittings. But even a bigger question is, how do we get the molecules? And here we need the whole of Europe to play its part, because EU's domestic gas production is set to decline this year, with the Netherlands, Denmark, and the UK playing a big role in this. Mm-hmm. So the EU needs to diversify and lock deals with Algeria, with Azerbaijan, with Egypt, the US, and potentially Norway. We are also going to need to take steps to structurally reduce gas demand, including behavioral changes. So it may really sound nothing, but it does make a lot of impact on the gas demand if we only turn down the heating, if we are going to consume moderately the air conditioning during the summer, if we are going to adjust boiler temperature, or even save through electricity. So
just on that point, Roxana, just to the demand factor. I mean, they always say high prices are the solution to demand, right? But Europe did a very good job already this winter. I mean, proactively trying to sort of get people to, there were high gas prices at one point, so that automatically, I suppose, we would have reduced demand naturally. But Europe did put some of those measures in place. I mean, what more can Europe do to sort of control, I suppose, demand or increase the awareness around that more than it did last year? Putting prices of gas aside, right now prices are pretty good. They're pretty nice for consumers. We don't have a crisis anymore. But is there still more room for those structural sort of changes that we can do on sort of demand management?
So to me, it is very simple. The sooner countries cut consumption, the more stored gas it can carry through 2023, 2024. But it's also good to look back and see what went well. And here we really support all the campaigns that were led by different governments at the EU level by putting ads on the television, screaming a lot through all sorts of media lanes that yes, we need to cut demand, we need to cut demand, we need to cut demand because your bills will come simply very high on your table. Are you going to be able to handle that? So a lot of awareness helped a lot. And it's also very important to see that different countries went through different stormy times because, for example, you have countries like Romania that they are more or less self-sustained because they produce their natural gas domestically. While on the other side, so people may not be as concerned as, let's say, the population of Poland, which was very much reliant on Russian gas for a very long time, but they've done very well to diversify gas supplies. So it's really a combination of very different factors coming from one country to the other. A particular point that we've seen with really high effect was in the northwestern part of Europe, where renewables were the mantra of the day. We need to rapidly deploy renewable energy and simplify permitting because we have to give up on natural gas as quick as possible. And what do we do to replace that? So there is not one size fits all, if I may say.
No, absolutely. And of course, renewables is the name of the game in Europe as part of this energy transition. But of course, what we saw Europe do to an extent and other places in the world, India, China last year, when there were high gas prices, when there was more of a panic over whether we'd have enough gas for the world, let's say, to last in the last 12 months. Of course, we saw a slight switch to coal again. You know, we have coal still, but again, we saw no hesitation even by continents like Europe saying we're going to have to supplement here and there with coal. How well, therefore, in terms of keeping gas as a competitive, clean, more or less clean fuel, how much further do you think the infrastructure for gas in Europe needs to go to meet the clean goals that Europe is always setting it for itself, right? The Green Deal, the transition goals. Is it on track with the sort of targets that Europe has set itself in terms of net zero, etc.? And how do you see that trajectory accelerating?
That's a really good point because this is a struggle that we have, and we have to be honest about it. Because on one side, we are very much responsible to deliver the safe and predictable gas that people are used to, but they've somehow also taken it for granted because it always happens to be there in their boilers, in their houses. So nobody was lacking that supply, let's say. But on the other side, while we need to ensure those continuous flows of natural gas, we also need to invest at the same time in the decarbonization projects. And it seems that our members are handling it very, very well, are juggling with this energy transition in a spectacular way. But again, we have to be very realistic because there is no one size fits all. So we have to avoid speaking in general about, okay, Europe will do this and do that. We have to zoom in because the starting points, the speed of the energy transition and the decarbonization pathways are different from one country to another. So what I can say is that our whole gas sector is working hard to fulfill those decarbonization goals, to set the trend for the EU Green Deal, the Fit for 55, now the Repower EU. And in that perspective, we are developing various projects in order to prepare this infrastructure to accommodate renewable gases such as biomethane, hydrogen, synthetic methane. We also need to pay attention that technology neutrality will be key. So it's true that there is this hype around hydrogen. We support it very much. So for that, we've developed the hydrogen infrastructure map. This is a go-to destination, a tool for stakeholders from around the world where they can see and map all current and planned hydrogen projects along the whole infrastructure value chain. So there you will find projects coming from the TSOs, from the DSOs, from the storage, from LNG terminals, and across different timescales, because it's important to see if we are going to deliver those targets by 2050. So what I can say that yes, we are committed to the energy transition, and the numbers on this map are confirming that, because at the moment we have 220 hydrogen projects in total, out of which 120 projects are developed by TSOs and DSOs. We have 40 hydrogen storage projects, and we also have 10 hydrogen terminal projects. So stay tuned, because this map will be constantly updated, as the hydrogen economy is very nascent and evolving very quickly.
Yeah, absolutely. And a lot of money, even in this region, in the Gulf where I am, a lot of money being poured into that, of course, as well. And this region in the Middle East is looking at itself as sort of an ammonia export hub, I suppose, in that sense, in terms of where its hydrogen journey might be going. Roxana, just in the last few minutes, let's look forward a bit. And in the context of the Russia-Ukraine conflict, I mean, you mentioned at the beginning, there are two ifs. You know, if Russia cuts off its gas completely, or more of its gas, let's say to Europe, and it depends what happens in China on the demand side. What is the feeling in your particular institution, Gas Infrastructure Europe, and in Europe in general now? 1 year and 3 months into the war. Oil, we see that oil is still flowing from Russia in different directions, perhaps, but there's nothing too unstable there in terms of how it's impacted the global oil market. How much nervousness is there about us having less Russian gas this year going forward for the next 12 months? Or have we settled into a familiar pattern?
Well, this is providing us with a lot of uncertainty. That's true. And for that, I think we can look at ENTSO-G. This is the European Network Transmission Operators in Europe organization. And they have looked into different scenarios. So perhaps it's really important to have a look in that paper. But what I think we can confirm for now is that as Europeans, we've learned some lessons considering Russia's invasion into Ukraine on the LNG side, because the current trend certainly illustrates the flexibility and optionality of LNG. And that is why LNG was able to substitute missing Russian flows so quickly. LNG terminals have clearly proved to be able to enhance security of supply through source and route diversification, secure access to global and competitive energy sources, and they also qualify as reliable storage providers that enable the development for hubs and trading. And we've also noticed that LNG has become the base load supply for Europe, a role that it used to have mostly in other parts of the world, such as Asia. So I think when it comes to the preparation of Russia cutting the gas to Europe, it's again a palette, a multitude of different factors. Again, let's not forget about the weather. This is something we cannot control, but still it contributed hugely to last year. Our infrastructure will be able to back Europe up. Now it's also a matter of where are we going to take those molecules from? And again, let's look at China, because China is opening the economy. China is also building new regasification capacities, and China is the biggest LNG importer in the world of LNG.
Absolutely. And what about the US? Because we saw quite a few cargoes coming from the US into Europe when we had, at the peak of the crisis last year. And before we had the comfort of Chinese demand not being so strong. But the US kind of came to the rescue partly as part of the European solution. Do you think Europe's looking for that as always an option as well going forward? Or will we see less US LNG coming away?
I think that is certainly not the case, not the case to see less US LNG coming to Europe. We've seen long-term contracts being signed because, of course, the LNG liquefaction capacities are benefiting from private investments. So they need to have a long-term perspective to be able to recover those investments. And for that, if you would be an investor, what would you do? You wouldn't want to risk that much. So you need to have a good portfolio of offers of potential customers that will be able to bring your investment back. So for sure, the US will remain stable and a long-term partner for the EU. And this is something that is for sure applicable in the gas business. But also, I think following the Russia's invasion into Ukraine, the EU and US have become closer partners on many aspects. When you also look at digitalization, at artificial intelligence, different tech companies, I think we've become like an even stronger couple than we were before.
Okay, well, I think we're going to end on that positive note there of partnership. Roxana Caliminte, Deputy Secretary General of Gas Infrastructure Europe, thank you so much for joining us today for your perspective and update on the gas infrastructure market in Europe. And of course, your organization spans across several countries, 27 countries, 70 industries. So you really are in the right place to tell us what the picture is at the moment. So thanks so much for joining us for Halftime Talk.